Hello everyone and welcome to Day Trader S&P 500. Today is Monday, November 20th, 2023. This is Dale Woodson, editor of Woodson Wave Report and the YouTube channel Day Trader S&P 500. We want to get our YouTube subscribers caught up. It's been a little while since we did a report. I'm going to start with something completely different here. This is a monthly log chart of the Dow. The 16-year bear market from 1966 to 1982. I want to show you in the middle of this long sideways bear market. I think it was 1973. The market hit a new high. That didn't mean it was a new bull market. It meant that at that time you're going to get about 9 or 10 more years of a bear market. A bunch of sideways nothing. That's how fourth waves can be, long and sideways. I know a lot of the indexes are pushing up, not on their 786 retracements, but up against the July or even the most recent highs, but in the B wave high back in July and the September highs. But wanted to just point that out. Okay, we'll see what happens, but a new high doesn't necessarily mean a new bull market. We'll see how it plays out. Okay, let's get into some of our analysis here. I want to start with the US 10-year. Okay, here we are. We had that upside trigger here at the wave 1 high, and that target was 5.1%. We got a 5.021%, which was the high of wave 3 with a circle around it. As you can see here, we have a 1 up, a 2 down, a 3, and we're in a 4. We've been in a 4. And this hit right on, this was a couple days ago, actually Friday of last week. It hit right on the 50% retracement, okay? That's a nice, perfect Fibonacci retracement. There's one below at the 618, which is 4.222%, and it should not go below the wave 1 high of 4.094%. So while it must allow for a move a little bit lower, this move down, this correction down, is complete or nearly so. And if we look at the bigger picture here, if that is a 1 back here, okay, from the year 2020 low, and that is a 2 back in April of this year, then 3 gains equality with 1 at 7.255. Near term, from this fourth wave low, we get this 5 with a circle gains equality with 1, excuse me, at 5.228%. So when this correction is over, this move up in 5 is in effect, and it's confirmed with a move above this wave 3 high here, okay? Obviously, if this 4 goes down lower, say to the 618, this 5 target will also go lower. But that's where it gains equality with 1. It could go higher, and at a minimum it should go above the wave 3 high, which is the 5.021%. Okay, so that's what we have on the US 10-year. We'll look here at the S&P 500 cash, a weekly bar. I'm going to show you guys a few things here. Again, A was 9 months, 195 trading days, and B was 9 months, 1 day longer. And that's A down there in October, that's B up there, and then we've got 1 down, 2 up. Again, it went above the 786, it's pressing up against the July highs, the B wave high up there. Let me make that full screen, make it easier to see. Okay, there we go. I have in here, it's hard to see because it's so small, but anyway, for the bullish count, and we covered this recently. All right, we call this a 1 where the A is, this a 2 where the B is, this a 3 where the big B is back here in July, and then a 4 down, that little bitty 4 right there, okay? But that 4 crossed below the wave 1 high, which negated the long-term bullish count, with the one exception, the caveat that it could be a leading diagonal to the downside where 4 overlaps 1. That happens occasionally. I see it a lot more in the smaller wave counts, like the 1 in 10 minute, not so much in the bigger wave counts, like this one's a weekly, okay? But here we are again. The wave 2 is not only at or above the 786, but it's pressing up against the B wave high, okay? And again, recall that picture of the Dow making a new high and then going sideways down for 9 years. Anyway, we'll see where this goes, okay? But it's pressing up against resistance. Let's look at the daily chart of the S&P from that B wave high. 1 down, 2 up, 3 down, 4 up, and a 5 down for the larger wave 1, and that wave 2 up again above the 786, pressing up against the B wave high back in July. Okay, the big thing here is the gaps. So unusual to have so many open gaps. We had a direct hit near our 4100 target, but you can see them there. I've got them numbered. Usually you get a breakaway, a continuation, and exhaustion gap. 3, a breakaway in the first wave, a continuation in the third. That's usually the biggest gap, and then exhaustion gap in the 5th wave. But this thing, you almost, it's hard to not say that it hasn't gone too far too fast. But again, it's pressing up against that B wave high back in July. We'll see if that resistance holds or not. We should know relatively soon. But it did go down and close this one gap. It's a little bit harder to see here, the 7th gap, just late last week. But that's what we're looking at in the daily chart of the cash S&P. Let's get into the ES here. I think I'll have that, yeah, that daily chart there. Let's make this big again. There we go. Okay, and there's that B wave high, a 1 down, a 2 up, 3 down, 4 up, 5 down, again near the target leading diagonal because 4 overlaps 1. Okay, and then we've got this huge wave up again. You don't see the gaps in the futures except for that one back here. That gap will not remain open. It will be closed eventually whenever this starts to retrace or reverse. Okay, but it's rare to have an open gap in futures. Like I've said, they're open 23 hours a day, and they close Friday night and open Sunday night. Okay, so again, there's the high so far at 45.71. There's the B wave high at 46.34. That's the make or break for that too. Okay, by the way, this was a 786 retracement. This B was a 786 retracement, and this is a little bit more than a 786 retracement. So the S&P is favoring the Fibonacci 786 retracements, and what better way to wipe out the shorts than to do a 786 retracement and then take it down, a 786 retracement and then take it down, a 786 retracement, and you get the picture. Okay, so that is the daily on the ES. I'm sorry. Here we have an hourly, pretty much the same thing. Okay, I wanted to point out here this 786 resistance with the red arrow was followed by a 271 point decline. This 76 retracement with the red arrow, was followed by a 444 point decline. We had an upside trigger. We have triggers and targets for our newsletter subscribers. We had an upside trigger here at 41.85, and that's almost a 400 point gain since that trigger was achieved, are activated. We get triggers which are activated and targets which are achieved. We had more in between here, but they've all been met and then some. Okay, again, make or break is the B wave high, and I gotta stress again, you saw the Dow chart. If it makes a nominal higher high, it doesn't mean that it's a new bull market, okay? That's the purpose of B or second waves. It's like, you go up here, we don't even have the A over there, but you go up here and it goes up and all the bulls come out right here and start bashing the bears and saying, it's a bull market, you missed it, and then bang, they take the rug out from under everyone, okay? It's shake out the shorts, get their stops, get them done, and then take it down. Take out the shorts, get their stops, get it done, and we'll see. We'll see where this goes, if it'll reverse or not. By the way, we're looking for that reversal. I might get into that later with the on our subscribers. We have a specific thing we're looking for on the shorter term. I think I'll have that on the report when I get to that with you guys. Okay. Let's show the 10-minute here, break it down a little bit. There was that trigger to these targets here. They were achieved, okay, and then we had these Fibonacci targets here. they were retrieved. We have a downside trigger here. Obviously that's a ways from being hit, but it's not actually that far. It's less than 100. Anyway, there's those targets. You can see where that hit. Let me move this out of the way so we can see these nice things. Okay, and there is the high at 45.71 so far. Okay, let's get into show you guys the most recent report we have here that went out after the market closed today. I think I can get in a couple of things I mentioned. There was our upside target. Our trigger was activated and targets achieved. You can see the trigger was here at 45.41. Once it was surpassed, first target, second target, third target, hit almost all of them. We've got the 1.618 up there. There's the date. There's the high. Okay, and you can see the upside trigger. Those are the targets we gave our subscribers to our newsletter. Okay, there's the high so far. There's the MOB at the July 27th high, and there's the verbiage of it there. Okay, that 45.71 was 4 points below the 45.74 target. Here's our bigger picture here. Okay, with the previous 786 retrace decline, 271, 78. By the way, this 7886 retrace led to this decline. So this decline here at 444 is roughly 1.618 multiple of this decline, which is 271. So it's almost exact 1.618, but we'll see when and if this reverses, if we get a 2.618 multiple or something like that. What we look for, maybe I'll have to find a different report. Here is the summation of that, and there's our triggers and targets. Okay, that one met with that decline, that one met with that decline, and that last trigger up, it just keeps attaining targets and then some. Okay, I think anyway, what we look for, maybe I can do this virtually live on I can do a 10-minute. What we need to see is let me get this out of the way, see if I can illustrate this. Okay, what we need to see, bear with me, I want to get this. Let me do this here and put the wave in there. Okay, what we need to see for a confirmation of a change in trend is we need to see 5 ways down, and we look at a 1 and 1 to 10 minute charts for this, and we've been looking for it. It's just not there. It hasn't happened yet. Okay, and then what we'll get is 5 down, or what we're looking for is 5 down and then 3 up, and let me put those lines in there for you guys. There you go. Okay, so we need 5 down, then we need 3 up to a lower high, lower than the beginning. All right, and then let me get this in here for you guys, and then we need to see 5 more down. Okay, that's the very beginning sign of a change in trend. Okay, look for this in a 1 minute and 10 minute charts, and we don't have it yet. Okay, and it doesn't look like it's forming from here. By the way, this I wanted to mention this high so far on November 20th. We had a 16th, November 16th turn date. So far this high is 2 trading days after the turn date. So usually get a slippage of 2 or 3 days. So tomorrow would make 3 days. So we'll see what it brings. If we get a turn on the 21st, it would be a 3 trading days from the turn date, the Fibonacci turn date of 11/16. Okay, so this is what we're looking for, and haven't seen it yet. We'll keep looking for it, but that'll be our first signal. Okay, and then there's a lot more after that, but that's the very beginning of it. Okay, so this is where we are right now. Again, everything's pressing up against those previous highs. I think I got the B wave up there. We'll go back to this weekly here. Okay, so there's the make or break for that B wave, and then the all-time high obviously is sitting up here. So we will see how this shakes out. Okay, let me leave you guys with let's go to let's go to the ES. Let's just leave you guys here. This is a near-term count on a 10-minute chart, okay? There's upside triggers and targets. There's our other targets. It hit almost all of them. There's one more up there, okay? And until next time, take care, everyone.